Let's bring in Keith Fitz-Gerald. Keith, have we hit bottom yet? Is it too early to say that?
I wish I was going to be wrong on this, but I don't think we have, David. There hasn't been a capitulation, a washout. The president's policies are a four-letter word that I can't say on national television. We've got energy problems, sentiment is dropping, et cetera. Now, the good news in all of that, David, is that everybody knows how bad it's going to get. And that's usually a sign to get busy and start picking off some of the great names.
Well, what should I be buying right now if I am? I mean, there are people going in looking for bargains. Is there any bargain out there?
There are bargains all over the place. The question is how you define it. Lots of people are just buying because they can. That's the wrong approach. To me, this is absolutely keep it between the buoys, keep it on the fairway, whatever you want to call it. Big quality names making must-have products that the world cannot live without. Nice to have stuff doesn't count. It's a risk you don't want. So to me, this is Apple, Microsoft, CrowdStrike, companies we've been talking about frequently because they're going to survive and they're still growing at 30, 40, 50% a year.
All right, the big R, recession. We're beginning to hear more about a recession, about a slowdown, stagflation, the worst. If we have a recession, should we be all in cash or what?
You know, history would argue that that's never a good bet. But, you know, if you need the cash in the next year or two, three, okay, fine. You're going to have to make a tough decision. Time's just simply up. But if you got 2 years, 5 years, I would argue that history says that's a bad move. You still want to be in to win.
And if we are in cash, because a lot of people at least have taken a big chunk out of their savings and put it in cash, what kind of cash should we be in? I mean, should we buy treasuries? Is there some kind of money account? What would you suggest?
You know, that's a really tough call because of the Fed's policy, because of the politics of Washington right now. You know, cash isn't what it used to be. I would argue you definitely want to be U.S. dollar centric, but in terms of how, that's really a question for the accountants. You know, I'm not smart enough to figure that out.
What do you think the Fed is going to do? We keep hearing about a 0.25% rise. They're never going to sort of nickel and dime their way into curing inflation if they just do a 0.25% every couple of months. So what do you think their end game is? Does this mean that we're in for double-digit inflation as far as the eye can see?
Well, I tell you, I'm pretty harsh, critic of this. These guys are probably dumb enough they're going to continue to raise rates into this storm anyway because they missed the foundation. They missed it in crisis and formation. They've continued to deny inflation. Now that they finally got it, we're suddenly supposed to believe that they're going to fix it. I don't think so. You know, so I don't know what their next move is going to be. It's all wild cards at this point. Frankly, I think they should hang up a sign that says we're out of business. We failed.
Wow. What are you doing, by the way, with your cash?
Well, I'm continuing to invest in those companies we just talked about because that's the way you grow your way out of this. You've got to have stuff that values. Everybody's given up food. They're changing their medicine. They're changing what they buy. But nobody I've heard yet is giving up one of these.
That's right. Yeah, absolutely correct. Keith Fitz-Gerald, always a pleasure to see you, Keith. Thank you so much.
Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below and of course click subscribe to keep up right here on YouTube or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.